Hello and welcome to this special. Banking and finance companies have been on a roll, and there's been a lot of talk about a real pickup in the economy. Is there one? Well, to discuss this, joining me today is Mr. Y.M. Diosthali, the chairman of L&T Finance. Mr. Diosthali, always great talking to you. Lots is happening in the NBFC space and L&T Finance in particular, but I am going to start off with the economy. We are, getting out the Q4 numbers. Most companies are giving projections for the year ahead, and things seem a little better. Or is that an illusion because the last couple of quarters have been so bad? What's the sense that you're getting?
I think there is some positive movement. Sectorially, there are a few sectors which are looking good. So if you look at, for example, infrastructure, which is one of the most important segments, because that sector is going to create jobs, and we need infrastructure in any case. So in some areas of infrastructure, such as roads and railways, transmission, these are three pockets in which we see a lot of activities. There are a number of road projects which have been tendered. The pickup in railways is also imminent, and we see a lot of transmission projects also taking off. Now, some of them are in government sector, that means public sector undertakings or government departments they're doing, or some of them are in private sector. So it's both PPP and non-PPP. But there is activity definitely visible in this. Some of the projects have yet to reach financial closure. Hopefully in the next 1 or 2 quarters we will see them. So on infrastructure side, and one of the most vibrant sectors in infrastructure is renewable energy. And we have a good position in that segment also. We'll talk about that later. There is a lot of activity. Government has big plans of building the solar power as well as wind power. As far as private capital expenditure is concerned, it is still extremely low, very lackluster. And it is to be expected because there are industries which are doing very badly. Steel, for example, I don't expect any investment in the next 1 year or so at least, because there is so much of capacity world over. And in spite of the fact that there are duties which have been imposed, imports are very much there. But it's a fact that steel sector in India, steel industry in India, it's somewhat in a better shape than what it was a few months ago. But it's very difficult for us to imagine that anybody would invest in steel sector. Same is the case of other commodities. So so capex is little away. At least next 6 to 8 months time, we don't expect capex to happen. What needs to happen is consumption. And I think that is going to be the trigger for future capital expenditure. So thanks to government expenditure, thanks to some of these infrastructure projects, thanks to spending through 7th Pay Commission, and also the money which government was keeping with it for spending, hopefully the consumption will pick up soon. And once consumption picks up, I think there will be a trigger.
Interest rates are coming down, and I think your cost of funds will also be coming down as a result. How do you see the interest rate trajectory going? Because the expectation, at least in some quarters, was a more aggressive rate cut. But we all know that the rural economy is distressed, and we will wait for the monsoons to come by. What is the trajectory that you are penciling in for this year?
See, interest rates have come down somewhat. We are not expecting substantial reduction going forward. And first of all, we need to know that as far as interest rates are concerned, for a large part of our book, they are pass-throughs.
Sure.
So they are variable rates. That means if the interest rate go up, there may be a time lag of 3 months or 6 months, but we make a correction as far as our lending rates are concerned. So it's a variable component. There is a book which is fixed also. So interest rates come down, there we get some benefit. But the point which I am making is that your strategy of borrowing and your strategy of lending needs to be absolutely coordinated. Today, and also how much asset liability mismatch you are able to take.
Sure.
Short term versus long term versus medium term. Overall, we don't think that interest rates are either going to create too much of a disturbance for us, nor are we saying that we are going to get huge benefits.
No.
What we monitor is net interest margin.
Sure.
And I think over the last 8 quarters, consistently we have improved net interest margin.
My question
we are also not expecting that net interest margins will go up from here. But if we are able to maintain the net interest margins at the current level, it should be extremely good for us.
My question was more in the larger economy. How do you see the interest rate trajectory coming in the curve that we have seen?
See, the general point which I want to make is, yes, interest rates are headed down southward. How much will depend on many factors like this monsoon. There is a potential for interest rates to come down, clearly. And given the fact that government is committed to fiscal discipline, they have demonstrated in the last year, hopefully they will do it in this year as well. Given that fact, there is definitely a scope for reducing interest rates. But I think one point is the Reserve Bank of India action, the other point is the banking system. These are two different things according to me. RBI has been reducing interest rates over the last 1.5 years, but banking system has not reduced. They don't have capacity to reduce to that extent today. They have all problems which are well known. I don't want to repeat. But I think the interest rate reduction largely should come from markets. So one shouldn't force the banking system. Of course, banks should reduce, but I think the reduction should come through bond markets and through money markets. That's through that the transmission should be more efficient.
Given the NPA crisis right now that the banking system is facing, what do you think is the road ahead? How do you see it clearing up? How many quarters down the year will there be some kind of resolution over here?
Well, I think as far as NPAs are concerned, we should not only look at non-performing assets. According to me, we should look at the entire bucket. There are restructured assets, there are non-performing assets, and there are assets which have been sold to asset reconstruction companies. So I think when we look at NPAs, we look at the entire bucket. I do believe that we haven't seen results of public sector banks for this quarter, but I expect that this quarter should be the peak as far as the NPA cycle is concerned, and we should see some easing in the subsequent quarters in the next year. That's what I believe. The second important point is that if the economy somewhat picks up, as I said earlier, there are some sectors in which there is visible action. The stress in the system also should come down. For example, there is a huge stress today in EPC companies. Why is it so? Because these companies were typically earlier only contractors. They all got into development business. They all were owners of projects. So many of them could not complete the projects. Some of the projects were aggressively bid. They could not arrange the equity funding for them. Secondly, there were delays in projects because of various reasons, land, environment, so on and so forth. Their core business of infrastructure was in trouble, and therefore the cash flow available from that particular sector reduced considerably. And therefore they could not arrange equity funding. So if the core business picks up, that means if they start getting contracts, there will be some relief. And that's what we were hoping. Many of these construction companies, if they start getting slowly contracts, either through the railway expenditure or roads expenditure or transmission, some of these areas, there will be some easing of the situation. We have been also saying that a lot of money is stuck of these companies with the government undertakings. So there has to be some release of that money to them. So if that process also starts, and we do understand that in the recent past, a lot of claims have been settled by NHAI. There is an improvement in terms, it is being speeded up now. So if this process continues, hopefully in the next 2 quarters we will see some easing of the situation. But it's not that everything is going to be out of the woods immediately. 6 months is the minimum period for things to stabilize.
Let's talk about L&T Finance. You've been in the news, and I think that the whole banking and finance space has gone through a major churn. I'm going to start by asking you, you've announced a restructuring of priorities of businesses, of looking at partners, getting out of some businesses. Before I come to the nitty-gritties of it, what is the rationale? What triggered this off?
Well, let me start by saying that we were one of the aspirants for the banking license. And we had also prepared ourselves in anticipation of that. In hindsight, one can say whether it was necessary for us to do or not. Anyway, that's history. So once the results were announced, we came to a conclusion. We were not selected, and that happened in 2014, just about a couple of years ago. Since then, we have been doing some work, and we are saying that, okay, if opportunity arises tomorrow, we will look at it. But now, let us create a robust NBFC. Let us make sure that the businesses in which we are in are profitable and they generate decent return on equity. So if tomorrow opportunity arises, we will address that. Right now, let us look at product lines or businesses which will give us sustainable long-term return. So that process had already started, and therefore we had started about a year ago defocusing on some of the businesses.
Very quick question, a follow-on question before you continue. Does it mean that you've given up hopes of a bank?
No.
Because there are going to be new banking licenses given out. There is a lot of consolidation expected. What is your stance on banking right now?
Clearly, we have not given up. We do definitely have aspirations. There is no doubt at all. However, I want to make it abundantly clear that it will not be banking for the sake of banking. The focus is on returns. And if it makes sense for us to get into a specialized banking space or a general universal banking space, which is going to create sustainable value for the shareholders and which is going to produce decent return on equity, we will look at it. So everything will be looked at it from this particular angle. That's what I'm trying to say. And we do believe that we will be able to, if you play the game well, we will be able to do that. So we are clearly aspiring to be a bank, but it doesn't mean that at any cost we will be a bank.
Would it make sense to look at some kind of acquisition, some kind of, there are talks about a possible stake buy in a bank, a reverse merger subsequently. I know there's a lot of speculation around everything.
Minnie, let me tell you very clearly, everything will be looked at from the point of view of returns. We are not going to do things just because they are very exotic. Nothing will be done. We are not going to get carried away by this concept that we want to be a bank at any cost. No. If it makes sense from the point of view of creating superior returns to shareholders, we will look at it. And we are not taking short-term calls. Medium to long-term, it must make sense.
But there are kind of, big changes expected in the PSU space. In this finance budget, the finance minister did mention about one specific bank, and that is IDBI Bank could be the next ICICI and Axis. What's your stance? Are you going to be interested in that at all?
First of all, we have not even applied our mind. I must tell you that. Secondly, as I said earlier, everything will be looked at it from the point of view of returns. It is not just for the sake of it that we want to be a bank.
But this is an established name.
Let me put it differently.
And if this is going to be the next ICICI Bank where the government stake is going to come down substantially, it's a tried and tested bank. I mean, is there any logic in it?
I don't know is the correct answer because we have not really studied that. But I must tell you abundantly clearly that this management and the team which is assembled here will look at everything from returns perspective.
So you're not saying no to it either?
No to what?
No to possibility of any.
We have not even applied our mind.
Okay.
There is nothing on the cards. We have not applied our mind. We have not even looked at it. So there is no I can't comment hypothetically. I can't comment on anything which is just speculation.
But if it makes sense, I'm not talking about IDBI Bank specifically, if it makes sense to have some kind
of... Any proposal which is value accretive, any proposal which is going to improve our returns, we will look at.
Okay, I won't get any more from you on that. So I will move focus. And let's talk about the rationalization of your portfolio that you were talking about. So what is this rationalization going to mean right now? How different is L&T Finance going to be in the next 6 months?
Let me first explain what is the rationale behind this whole thing. I was telling you about this bank ready concept. Okay. So in the process, we were also we got into some products which did not make sense as an NBFC, but those products would have made imminent sense if we were a bank. Now we are very clear on what we want to do. So the first point is that we have to look at the product basket clearly from an industry attractiveness point of view. What's the size of that particular market? What's the competitive position? What is the regulatory environment? What is our position in that? So there are three clear filters which we are going to apply. Size of the market for that product, and every product is being looked at from these three filters. Size of the product, profitability on a consistent basis, and what's our competitive advantage or what is our right to win.
Sure.
So if we have applied these three filters to all our product lines, and we have decided some core products in which we are going to grow. There are some product lines in which we already have a clear advantage. So we have created a right to win in some ways, I should say. I'm not boasting, but I think today there are 4 product lines in which we have a substantial position. For example, tractor financing. Over the last few years, we have created a good position for ourselves. We are market leaders in two-wheeler financing. I'm not saying we are number 1, but we are in top 5. It's a fragmented industry. So long as we have a decent size, it's fine. We are clearly a leader in renewable financing today, because nobody was willing to lend to this sector 4 years ago. Everybody had reached their exposure levels, and we did a lot of work. By the way, it has not happened by accident. We invested a lot of time, energy. We invested in research of both the sectors, solar and wind, state by state, developer by developer. So it's a center of excellence.
And now it's about 10,000 crores in the book on the infrastructure.
Center of excellence which has been created as far as renewable energy. In the last 1 year, we have also created a good position in microfinance. We are among the top financiers today. So these product lines, there is a distinctive position. We don't have a distinctive position today in housing and in real estate. But those two sectors, we will create a right to win. And the reason why those sectors have been created, we have a starting position. We have recently started that business about 1 or 2 years ago. But there is a tremendous synergy with the parent as far as this business is concerned. There is good market, huge market available there. And we have been doing this business in a fragmented manner. So very clearly, in a focused manner, we can create a right to win in this product line. And lastly, there is a mid-market segment, which means mid-size corporates, where on an opportunistic basis, we will work on structured financing deals, loans against shares kind of products.
This is very interesting, the AMC space, because 2014 was a year of record inflows, 2014-15, and now it's all about scale and size. And in this period, you've seen some of the biggest multinational big names walk out of the Indian market. So I'm going to ask you, when you talk about the fact that you need to be much bigger than 25,000 crores in this space.
Yes,
I mean,
we will
scale is going to be the biggest issue. So what are the options, permutations and combinations?
I'm saying that we will look at a strategic partner, a minority partner who is willing to add value. That means they will help us to grow, scale up. You're right, scale is important. But I must clarify, scale is not the only thing in mutual fund industry. The composition of your AUM is also important. So you may be 50,000 crore, but in that 50,000 crore, if you have 1,000 crore of equity, in terms of value, it doesn't make much sense. So what you need to grow is, you need to grow in such a manner that the percentage of equity AUM in your overall AUM is sizable. From a value creation perspective, it is important for you to have a balance between debt and equity. You can't be big and only in debt.
Sure, fair enough.
What we want to do is, we want to maintain this 40% kind of percentage in equity. So we'll grow in that particular manner, retail and equity.
So how far have you reached in this journey of finding a minority partner or a strategic partner?
No, we haven't reached anywhere.
Is there a time frame that you're looking at that
No, I think as I told you, there is no compulsion. But we are working on it. I think.
But why stay in the AMC business?
Sorry?
Why stay in the AMC?
It's a very important business because I think this is a very important point. Our goal is to generate high teen ROE. Okay? AMC is a fee-based business. If you see, we have invested some capital for acquisition. If we are able to some extent monetize that, then the capital is free. Then it's a completely fee-based business. And you need to have fee-based activities to supplement ROE efforts in the lending business. So fee-based activities are very, very important. So in your lending business also you need to generate fees. Similarly, you need to have standalone businesses which are fee-based businesses.
Do you expect consolidation in the NBFC space? Because suddenly it's become also very crowded. Of course, India is a massive market in different categories. But do you think, over here also in the next 5 years, because the economy is going to take off, everything will be about scale.
If economy grows, there will be space for everybody.
That is true.
I don't think that, see again, consolidation for the sake of consolidation will not happen. At least we will not participate in that. If it is going to make sense for me to improve my ROE and also profitably grow over the years, we will look at.
So in areas which you want to grow,
yes.
How home finance, for instance, could there be
possible.
a possible?
There, if some proposal comes our way, which helps us to grow profitably and walk on this path of improving the returns, we will look at. There will be some possibilities. For example, microfinance. If there is a proposal of a meaningful proposal, we will examine.
Because suddenly microfinance has become very big with some big players listing and going in for IPO.
I think microfinance as an industry also has changed considerably. There is a lot of discipline in that sector.
Sure.
And I think that good things have happened there in that. Today, for example, we don't lend without Aadhaar card. That is helping us tremendously. So excessive borrowings are curbed. Over a period of time, technology also is going to play a significant role. For example, we have started using mobiles for sourcing in microfinance.
Sure.
I'm not suggesting that we have achieved 100% success as yet, but over a period of time that will help. So my point is that industry also is getting disciplined.
Yeah. Last question, I want to end on the economy. Everything depends on the rains in this economy because, we've had 2 years of rural distress and you would have suffered as well because of your exposure to the rural market. How important is this going to be in the scheme of things? And if we have a good monsoon, do you see a lot of the woes clearing off?
I agree. I think so. Monsoon is extremely important for us, particularly for the rural economy. And also I'm not saying that the entire economy, but number of states which are dependent on monsoon. We are still, for example, Marathwada region in Maharashtra is completely dependent on rain today. And we haven't taken steps to actually manage this particular situation well over the years. So it's very important. Monsoon is very, very important. But economy will still do well in case the monsoon is somewhat inadequate. But it will do much better if a monsoon is what is being predicted. I think, for the rural economy to completely come out of the problems, it will take a couple of quarters still. It's not going to happen once it starts raining. It doesn't mean the farmer will get money in his hands. But for him to get money in his hands, it has to rain. Crops have to be,
sure.
And they have to come to the market, and their cash flows should improve. So I expect the rural economy to really start looking up in the festive season of October to December.
Okay, on that very positive note, Mr. Diosthali, let's hope it rains and let's hope we end this year far better than the way we started it. Thank you so much for joining me.
Thank you.
Thank you.